Hi guys, good morning. Tuesday 7th of August, just gone 8:30. So we'll run through what happened yesterday, first day of the week, what happened overnight, a couple of stories, and then what could happen the day ahead. We'll have a look over the charts as well in what, like yesterday, is a relatively quiet day on the data front. However, just having a quick look at the markets from yesterday in the morning, probably around the time of the briefing actually, the dollar started to strengthen a bit more than it had normally, pushing above its high here in the dollar yen, the dollar index pushing quite consistently higher above the $95 handle, which still remains quite important this week. Where we close on Friday will be interesting to see. And you can see we pushed higher here in the yen, the pound and the euro came under quite significant pressure in the morning, just past 8 o'clock into really midday and a bit beyond there until 1 o'clock before we start to see a reversal in a few of the pairs. That is the lowest level since September last year for the pound. We'll come on to a couple predictions about this no deal following Liam Fox's comments in a moment. But yeah, lowest since September last year. You've got highlighted just on the left-hand side there the reaction to the Bank of England, the 9-0 vote, but nothing really changing following the meeting. And yes, we have drifted lower. I was speaking to Anthony this morning about is this a buy opportunity? November last year when they had the rate hike, the next 6 months were all higher. In what was perceived to be a much more dovish reaction, much similar to Thursday last week, and he said not just yet. I feel, while yes, Brexit concerns were rife in November last year, the timeline is running out, and that's what's really sort of weighing on the pound. His view at the moment, all things considered, is we should come a bit lower. And I'll come on to the Bloomberg article in a moment where they believe we could actually get back down to that 120, that multi-year low we got following Brexit. Remains to be seen. I think it is going to be Brexit-related talks until the remainder of the year that really moves this market as well. So we're down below the Bank of England reaction on Thursday, albeit with just a bit of a respite this morning. Euro pushed lower, same sort of time, that dollar index pushing above 95, euro dollar coming under strength, and to the tick hitting the 18th of June low there. So if I just put this on a longer time frame, you'll be able to see the significance of that level. I'm just going to take the pivots off just to make it a bit clearer. So you can see here, early morning, came back down. I'll just move the text out of the way as well. And you can see, hit that level to the tick. Let me just remove that there before pushing higher. So 18th of June low, pushed on, really good support level, not too far away from that low of the year. Again, there's the dollar strengthens, and I think if we do accelerate away from $95 on the dollar index, we will get a break of these lows, and soon the low of the year. But for now, holding quite strong, and again similar to the pound this morning, just seen a bit of dollar weakness come through, and we've pushed above the sort of the high of yesterday afternoon as well. Oil, you had the Iran sanctions. I put ... maybe. We've seen a few times in the previous weeks all these geopolitical concerns concerning oil. Sometimes you're getting reactions, sometimes you're not. As the market sort of came in early morning yesterday after sort of the London Open, volume picking up a bit, you got a bit of a push higher, only to come back down. But there was a couple of half decent opportunities. I was talking to the new sort of interns that we've got, and about the sort of the break higher of the high of the day, and how that would then act as a pretty good support level. And you can see it did come back down, find support on the previous high before pushing on. But into the back end of the session, we came back a bit lower to form quite an interesting support level, which I feel for today is definitely one to keep an eye on. It's pretty much the low of today, so eyes on around 68.79 on the futures to see if we can hold that. We'll come onto the data calendar later, but it's not often that you say that the API is probably the highlight of the day. I think that says a lot about what to possibly expect in the coming session as well. T-notes yesterday up to quite a significant resistance level. You can see how well this has held. So something to bear in mind following yesterday and what was a quieter day data-wise. Technically, the markets reacted quite well, and coming up here, pushing higher, bonds in general, but the 26th of June low, also the 19th of July low, and then to the tick, acting as a strong resistance. If we lower that time frame down now, you can see the reaction that we got there last session around 3 p.m. UK time, and we're just coming back down now to test the lower point of the morning, which is also the area we broke through. So quite a significant level for TNX. Obviously the volume not really going to be there for now, but worth keeping an eye on that as well. Gold yesterday, it's a tricky one for sure. You know, there's a lot of talk about whether we're going to get this sort of summer rally. You know, it was the low that we had on non-farms, or before non-farms really, but on non-farm Friday, is that going to be the low? We didn't get a test of that yesterday, so that is quite significant. If we can have an update today, maybe push above yesterday's high, then I think that sort of does cement that case that it could well be the low for a while. For me, I've said it a couple of times, but just to sort of reiterate, the level that I want to see break would be 12.35 here on the daily continuation, not just because the highs that we had recently, but was the low that we had in the back end of December. Let me just move that above the camera, before we tested it again in July, breaking through, and then a couple of times we found resistance there. If we get a break above that, I am a buyer, you know, all things considered at the moment. Coming on to last sort of market move of yesterday of significance, you had the cash open see us come under pressure in S&P to find support on the low of the day, or the pivot, or Friday's high before we broke through late into the session. Three sort of strong technical levels, so again technical levels working quite well yesterday, and we pushed on to make a new high for a while, and unbelievably from today's high to the all-time high, and this is roughly drawn but 0.78% away from the all-time high in the S&P. You know, just to put that in perspective, if we have a day like we did on Friday, Thursday, we would have a new all-time high today. Is that going to be the case? Probably unlikely, but 3 up days in a row, 22 points away. As of about 6:30 this morning, we had another push, so definitely one to keep an eye on there for the S&P. What's going to stop it in the short term? The trade talks not really having a negative impact anymore. Bit like the boy who cried wolf in that respect. So yeah, stronger dollar, not pulling it back. Trade talks, not pulling it back. So it seems like the only way is up for now. Overnight stories, we'll come back onto the pound in a moment in terms of looking at the chart. But here, the Bloomberg article, following these comments from the Trade Secretary Fox over the weekend, that the likelihood of a no deal is as high as 60%. Analysts believe that we could come back down to 120, which is obviously that low that we had from December 2016. Trading now, roughly just under 130. So quite a big move to the downside if there, was that no deal scenario. Whether that is going to happen or not, obviously remains to be seen. You've got some important dates coming up in October as well, which makes me want to just sort of hold off getting into a pound long. Although I do believe in the short to medium term that opportunity will arise, as maybe we do have to come a bit lower before pushing on. So if we do have a look at the pound in terms of that longer term level, where is the low? Let me just bring this into picture now and put this on a weekly chart. Let's remove the pivots again just to clear things up. So trading on the futures just below the 130 and that 120 level marked up in the Bloomberg there. Nice sort of double bottom. The first sort of test of that coming in October, late in the year, sort of December wise, and you can see would be quite a significant move to the downside, but we have continued to push lower week after week. Now this is if this week obviously continues to finish lower, would be the 5th down week in a row, and quite significant support would have been broken. You can see here from the September, October levels, if we continue to push on and maybe get a confirmed break below here again, and suddenly, from a technical point of view, August 2017 levels and the market, key support, you would say around 126.30, June and March, we had significant price action around there. Can we get down to those points? I think remains to be seen. It's firmly in the balance at the moment, but the sentiment of this no deal is definitely driving the markets following the weekend. So in terms of directional bias, I think short term has to be to the downside. You know, all things considered, you know, that would be my choice of direction. We'll come on to how the markets are sort of trading today, where it could be a good place to get in, but the low that we had on Friday almost reached today. What was that? 967. Okay, yeah. So didn't quite get up there. 4 ticks away, but I suppose that's a test of that market, and that would have been a good opportunity to get short. Also, from yesterday, we had the Australia holding, keeping rates on hold. The reaction was very limited. You can see here 5:30 UK time. Hardly any real reaction from there at all. Low rates supporting the economy. These were just some of the comments that came out. CPI expected to be lower, but GDP expected to be higher, so you've got a bit of a mix. Wage growth remains subdued and to be expected to be so for a while. But look, hardly any reaction. We then have pushed higher this morning, just on the dollar weakening a touch, as mentioned earlier, for the euro and the pound. Overall, this market, I'm not really fancying these comments to sort of, you know, change things. No real reaction following the interest rate decision, but we are, you know, still just drifting higher this morning. So one thing just to keep an eye on there. The dollar index, which I'll bring up a chart up in the moment, around that 95, really key, I feel, to this week's sort of price action as well. Really, that's it news-wise overnight. The market was quiet in terms of news events that were driving the market yesterday and then today as well. Data-wise, there's not much coming out. I mentioned earlier the API is literally really the highlight now for the remainder of the day, coming out at 9:30, and we all know that the reaction seen from that is usually quite limited ahead of the DOE tomorrow. Speaker-wise, you've just got Bank of England's McCafferty, who is on the way out anyway, speaking on LBC around 4 o'clock, or expected to. You know, worth maybe, you know, tuning into sort of the Squawk or your tweet deck around that sort of time on Twitter. But not really expecting anything here, you know, to really move the market. You've got the Red Book out 1:55 and the JOLTS job openings at 3 o'clock. But yeah, not expecting to see too much in the way of sort of data driving these markets. Of course, comments, you know, worth keeping an eye out. The trade talks not really moving the market too much, but anything Brexit related and maybe, you know, a bit more on these Iran sanctions from the US. Could that help sort of drive oil and push it higher or lower, remains to be seen. Having a look at the markets for today, you know, what could be the potential opportunities we talked about yesterday have been quite technical, so something just to bear in mind going into today. Starting off with the euro, let me just bring that into picture here. So dollar weakness is pushing us a bit higher. Also probably got a bit of a break of this trend as well, which is, I would say, quite significant. Let me just put that on there. So coming up from the high of the 31st, decent sort of breakthrough early this morning. We are coming off higher levels. So in terms of technical points of interest, just in the near term, you have the high of the Asian session, which I'd keep an eye on as a potential support area. We've already tested yesterday's high and found a bit of support for now, so that would be the next sort of level that I'm looking at. In terms of wanting confirmation in these markets to sort of go a bit more aggressively, if you were looking for dollar strength, I'd say really, you know, the sellers might look to come in around here underneath this level of what is support at the moment. Low of the day, I'd focus a bit more just below that on the low of yesterday evening, 115.82.5 on the futures. If we can get a break below there, S1 as well could come into play. We've got those longer term support levels from earlier in the year for the euro, seem a bit far away for now, and you know, yesterday's price action was rather limited, slight down day, and I wouldn't be expecting too much, and I'd be patient though. You can see a couple of times yesterday up to the highs of the day, there's a good opportunity to get short, so patience would be the main focus, I would say, especially coming into the main part of August, where markets typically are quieter. The pound talks about yesterday's level as or sort of Friday's low as a good level of resistance. We've had a test of that, 3 ticks away. That's it's a test of that level. So I'll be focusing on that high again if we were to come up and test that. Decent level of support. Yesterday's low to sort of high of the afternoon. We broke through, found support. So again, sort of stuck within these ranges. This is where I'll be focusing on now. Probably leaving the pivot alone. 72 or 96 as the next key levels on the futures. But you can see how well those levels of support and resistance have held. Those would be the next points that I'd be looking to get involved in. From higher up, where would I be looking to go short to sort of continue this recent trend to the downside? I think R1's not too bad. I think as well, if we can push on to what was the low from yesterday's morning, we haven't really had a test back of that level. So you can see we found support 7 AM yesterday. I like the look of that, around 130 as well in the futures. I think you could get quite a good short back to maybe where is the high of the day now. Equity wise, just to sort of wrap things up, I think you've got to favour the upside. If we can get down towards the pivot, technically it looks really nice. You've got the low of yesterday afternoon, you've got the high of yesterday morning, you've got the pivot in the middle there, you've got the direction of this market. It does look quite good. For those that are only interested in perhaps looking to go short, maybe you don't believe it should be up this high, I'd definitely be looking to have this trend line on. That's been respected quite well from late last night to this morning. A break of that, you could get a bit of a fast move down to perhaps the low of the day. Preferring this in the afternoon would be my advice. Dow Jones lagging behind overall in the grand scheme of things, the S&P and certainly the Nasdaq. Similar sort of trend line to have on the market that has been respected quite well. It might be that later in the afternoon you see all these markets come back to test these trend lines, and again in the Nasdaq you can see it there. So that's what I would be focusing on if you were to look to the downside. Probably worth noting for the Nasdaq, still a bit off its all-time high as well. Obviously we made a new one much more recently than the S&P, but if we can get a bit of a push today, it wouldn't be all too surprising to see the all-time high that we made on the 25th of last month come into play again. We seem to have rode the earnings wave, which was higher and lower almost daily with these big companies. But look, we're up to levels seen on the day of the all-time high, so not too far away. I feel the only way is up for now, all things considering. I'd be keeping an eye on the dollar index. I'd be patiently waiting. Oil might be worth as well, just looking more at this in the afternoon, as that's when the real sort of moves happened yesterday as well. Any questions as usual, please do get them in the chat. Data calendar relatively quiet, but I'll come on the mic as and when. Hope you all have a great trading day, and I'll catch up with you throughout.